Okay, very good morning. It is Friday the 23rd of February. Just to quickly draw your attention to cable this morning. I've just seen it, just as I start, seeing a bit of an uptick here, just putting it on a minute. Pretty decent move here just happening from the futures, about 39.75, just quick flick up towards that 140 handle. Now, I've not seen anything breaking news that's come out, but certainly there is quite a bit of headline domestic press obviously about this crunch meeting that was held by 11 senior cabinet members of the Conservative Party last night. We're going to have a look at that in a bit more details, but it doesn't look like anything news-wise here on that last little pop. 140 though, the handle psychologically, just keep an eye on that level. Obviously that was the high that was seen yesterday evening, really after most UK players would have gone home. So I'll leave that to Sam though to discuss in a bit more detail. Just talking of market movers first, not sure if anyone else apart from Sam knows who this is. I've been reliably informed by Sam, Kim Kardashian's half sister, Kylie, is that right? Jenner. Who, the reason why I'm pointing her out is because, you know, forget central bankers or government speakers. This young lady right here tweeted last night, the power of Twitter. She said, "So, does anyone else not open Snapchat anymore?" And, you know, jokes aside, Snapchat shares fell 7%. Immediately after she tweeted. And to put that in a little bit of context, this one tweet saw Snapchat shares lose $1.3 billion in their market capitalization. So if you're a single stock trader, I'm afraid it's gone beyond monitoring Trump on Twitter now. I'm going to have to start following Kylie Jenner. That's it. The game's changing. But yeah, incredible. Like one tweet, you know, certainly these were stocks, don't forget. These social media type linked names that were such a booming in 2017. But you can see how fragile that they are to such kind of celebrity situation. So just a really interesting move, I thought, from yesterday. Anyhow, I'll let Sam monitor that feed for me. I know he already follows her anyway. So going back to the charts. Looking at this morning, we've got there's not really a great deal of fresh fundamental news that's happening, but we did have China return to market. This is obviously after they've been out for consecutive days for the Lunar New Year holiday, and if anything, they helped just push equities up a little overnight in terms of the Asian stock performance, and this does follow on from a positive close on Wall Street. The S&P was up about 0.1%. And the Dow up 0.7, Nasdaq up 0.4, so a little bit of stability returning, and that largely explains this kind of gap up that we've had in the European equity market. But if you were looking for any real concrete fundamental reasons to keep the equity price elevated, well, there really isn't a great deal, and consequently the DAX, after kind of opening up at around close proximity to the R1 level, has actually drifted lower. So if you look, technically it's a fairly nice kind of setup, I guess, the way that the market opened in the futures, because we opened and moved higher, and you can see that initial low point of activity just matched up with that move that we saw from what would have been yesterday afternoon's session, when the price movement headed higher. And that was around the same resistance points that we've had that defined the range pretty much for the week. So a break back below that, and we've had what has been broadly a gap fill then on that initial quite bullish open, which I think makes sense. I don't think there's much reason for the price to remain that elevated in that respect. Elsewhere, fixed income as well is seeing a bit of a pickup. Bund's already up about 36 ticks, and quite interestingly, if you look at the US 10-year, obviously this time yesterday we were talking about the kind of hawkish move that we saw in yields yesterday on the back of the interpretation of the FOMC minutes. That was the repercussion then for the price of the US 10-year. It fell, but we have recouped and retraced the entire move back to exactly where we were trading on the run-up prior to the release of those minutes. So the move hasn't really continued or been sustained to that effect, and yields have just backed off slightly since that point. The ECB minutes as well yesterday, after we had the previous ECB minutes, which were a real hawkish surprise that didn't really quite materialise yesterday, and so maybe just a little bit of repricing as well in the European fixed income markets, and also with the fact that we've got through quite a hefty amount of supply as well for the week. It might just make things a little bit more bullish in the fixed income space short term. Currency wise, dollar weakness since really Europe has come into the market. Now the Dixie is still trading slight positive, but you can see since Europe's come in, we've had a bit of a recovery in the major pairs here. So back to pivot in euro dollar, just testing here. So quite an interesting test of two levels here. You've got that 140 and the yesterday high in cable, and pivot on the upside in the euro dollar future. So just to keep an eye on as we go through the next couple of hours. A few other things then from a news perspective before I hand you over to Sam. This was obviously the talk that was happening, kind of crunch talks, as I guess Theresa May tries to form some kind of unity in her fairly fractured party at the moment between the kind of much more Brexiteer camp and the pro-European politicians. Not really sure. I don't know if Michael Gove can actually pull a normal face. I'm not sure what's wrong with that chap when it comes to photographs. You know. But they basically had 8 hours of talks. Even not just the Brexiteers, but the pro-European contingent said that the talks had gone well. This is all part of the preparation, of course, for Theresa May to outline a key Brexit speech next week. And what they've basically come up with is what's been termed by David Davis, the Brexit Secretary, as Canada plus deal. Now, what they're saying then is Britain would look to seek and negotiate a free trade agreement similar to the EU-Canada deal, but then try to embellish it by securing better access to the single market for goods and services through close regulatory cooperation. Now, one thing I'd say is, looking just through some of the details that they discussed, there's no real discussion on Northern Ireland, which I know I keep banging on about, but that really is the point of which they're not discussing it. Why? Because they don't have a solution for it. So I don't know really how much this is a little bit of, I guess, posturing ahead of the European meetings, obviously, they're going to take place to show a form of unity from the UK side, because we've already had, about 20 minutes ago, I just saw a Sun political journalist tweeting his sources saying that I'm told that cabinet sources have agreed that Brexit blueprint, i.e. what they discussed last night, is an ambitious opening gambit. In other words, there's little expectation, even within the members that met yesterday, that Europe will ever accept it. You know, so I think this is all a little bit. I don't really think that this is the reason for the pound's strength. When you look at the major pairs this morning, this is more a bit of a reversal in the dollar. Hence, consequently, euro dollar is moving, tracking the same price movement as cable. The one thing from a political perspective, of course, and that you're starting to see, though, is that obviously the Labour Party is starting to line themselves up as the credible alternative, because if the Conservatives follow the path that they're going down and try to play a little bit of hardball, then those more pro-European politicians could well jump camp to Jeremy Corbyn, because now he's looking to reverse course, and apparently on Monday he's going to shift Labour's position on Brexit and talk about looking to keep the UK in the customs union with the EU, which is obviously the opposite of the Conservatives. So you can see how the direction this is all going and what his ambitions would be in that sense. A few other headlines to have a quick look at. You've had some data this morning, just to make you aware. German GDP, strong fourth quarter, growth driven by rising exports. So you can see here from a growth point of view, although IFO yesterday came in a little bit weaker than expected, so this obviously accounting for the still ongoing coalition talks in Germany, so a little bit of domestic uncertainty on the political front, but then you've also had that momentary stock market correction that we had a few weeks ago. So it has dampened sentiment a touch, but if you're looking at the data set of IFO in general, it's still pretty much near record all-time high levels. So things still looking fairly comfortable from a domestic point of view in Germany. The other thing is lots of corporate earnings again in Britain, in Britain, and these are some of the biggest gainers and losers. So again, for anyone trading, say, the FTSE, for example, you've just got to be aware of these earnings reports, because they do have a meaningful impact on the single stock, and if it's a big weighted cap company, that's when you start to see possibly some divergence between the different maybe UK and European indices, depending on who's reported. So Pearson, they're up about 5%. Standard Life, Aberdeen, positive. BT Group, positive. However, RBS are on track for their steepest slide in their share price since 2016. So this comes even after the bank snapped a 9-year streak of losses. So again, it's not about a company making losses and then turning profit. It's about how does that company's actual figures stack up with what the market was expecting. If the market was already expecting a profit, but a bigger one, then irrespective of this change to profitability, it doesn't matter. It's a disappointment. And RBS, the biggest loser in the FTSE this morning. Okay, quick look at the calendar. This morning, the main kind of feature, the things you need to look out for are inflation out of Europe. However, I wouldn't be expecting too much because this is a final reading, so do take that under consideration. And that pretty much wraps up the morning. And then in the afternoon, excuse me, anyone who's trading the FX market and the Canadian currency, you've got the CPI inflation figures. They always are market moving for that specific currency, but from the US side of things, it is pretty quiet. But if you check out the speaker schedule, that is pretty busy. And one of the main things to have a look out for is you've got an EU informal meeting of the 27 heads of state of government. So just given the context of that Brexit meeting in the UK yesterday, maybe keep an eye on that. Bank of England's Ramsden, Sir Ramsden I should say, is speaking at midday. Now just to refresh your memories, here's the hawk-dove scale for the Monetary Policy Committee, and of course Ramsden along with Cunliffe were the dissenters not wanting to hike rates most recently. They were the two dissenters, Ramsden being the most dovish member. So again, if you're building a reference point, I'd be expecting maybe a slight deviation from the normal Bank of England rhetoric because of his far-reaching dovish view, and he is talking about productivity and economic rebalancing, so worth keeping an eye on for any pound traders. Otherwise, you've got Dudley this afternoon. The Fed publishes Chair Powell's semi-annual monetary policy report at 4 p.m. And there's a few other things later on in the evening for any of those who are sticking around in the market later into the late hours. Alright, let me hand you over to Sam then, and he can have a quick review over some of the charts for the day. But if I don't speak to you before then, have a good day and a good weekend.
Yep, good morning. Let's have a quick look over the euro for now against the dollar, which we're just sitting relatively interesting level around that pivot. You can see yesterday afternoon and then into the early hours of this morning, we had some decent price action where we found support breaking through, and we're just finding a bit of resistance for now on that level of the euro. As mentioned, you've got some data out at 10 final readings, so perhaps not expecting too much from that, but definitely a point of interest in the markets for the euro dollar as we speak. The DAX has sort of filled the gap completely, having gapped higher, and if we have a look back here over the last few days, you can see just how range bound it has been, just marking up the top of that range down to the bottom, or thereabouts, of the last sort of, well, that's from the 15th of Feb there, so for the last sort of couple of weeks really. Going to be wrapping up obviously that week today, it has been in this bigger range. Perhaps the safer bet is to wait for a breakout of well, either way, but we're just coming back down now to fill the gap. So definitely for the euro and the DAX, worth keeping an eye on the markets for now. FTSE as well, just catching my eye as we are sitting on the pivot. Let me just lower the time frame, or just, the probably more important level than the pivot is that 72.30 here on the CFD. Good area of support all morning. I think if that was to go, that opens the door, and S1's not completely out of the question, but for now holding quite firm. With the FTSE down, you had the pound pushed to that high, and yesterday's high working as a good level of resistance along with the 140 handle, and you can see we just pulled back to where we did find some support last night, and again acting as support for now. Having broken through, I think either from a continuation perspective it might well be worth just looking for that 140 to properly break, or for a retracement to what were the highs of the day. I think getting involved where we are now, unless there's sort of price action getting squeezed, probably safer to really wait for a retracement down, I would say. Have a quick look over the currency pairs. Aussie dollar, if it comes back to pivot, not the worst in the world. However, you could see early in the Asian session the pivot had been chopped around a bit, so I don't know, maybe it is better to in terms of continuation of this recent trend of the Aussie dollar, it might be worth just sort of sitting on your hands, I would say, and maybe yesterday's high, or even the R1 with the high that we saw on the Wednesday might be the safer option than looking to get involved sort of where we are currently right now. Dollar yen, let's bring that into the picture there. You can see just found resistance. Really nice sort of trading opportunity, this one, where we found resistance yesterday afternoon and this morning, and we've now come back below the pivot, lowering the time frame down where the next sort of areas could be. You've got point of interest where we are now, albeit not the strongest level in the world, before getting back to this sort of trends. Each one of these lows would be interesting to see if we could take profit on those, and then if we were to break there, it does open the door down. So another interesting sort of currency market to keep an eye on there. Equities, I was in the office around, let me just sort of circle it up here, around here, and it was moving quite volatile up and down, but even when we did move down into sort of the close, we rebounded again, and there's definitely a bit more calmness, I would say, in the market than a couple of weeks ago, but still these daily ranges are obviously quite a lot bigger than what they were a month, the beginning of the year. So something to bear in mind about where we finished the week. If we put this on a longer time frame, let me just remove the pivots to clear it up. We have pretty much taken back well over half of that move, you would say, but now just in this sort of consolidation of the last few trading days, if we can finish towards the top end of that, it will be a case of, you have to say, of a matter of days, weeks, or less than weeks really, of to sort of have another test at the top end of the year's range. It's not completely out of the question to say we can get here today, 27.55, if all went well for the week. Similar picture for the Dow and the Nasdaq. Let's have a quick look over at those. Oil yesterday, the data release at 4 o'clock, understandably pushing higher, bigger draw than expected, and the gasoline numbers were also better than what the API had forecasted. So yeah, understandably pushing higher. I think in terms of places where you could see a decent area of support, the previous highs from what we got here, the 20th, around 62.44 on the futures, doesn't look too bad. Yes, it perhaps seems a bit middle of nowhere, but I think the first sort of test of that area should be pretty good. Pivot and yesterday's initial high before the DOE release looks also pretty solid, but that would be, if we had a fib on there, probably about just around 50% as well. So I think that could be the sort of the safer play, perhaps, to wait for the pivot, but also keeping an eye on the dollar index at the time, see if we could see some strength for that. But just over the last hour or so, you are seeing the dollar index weaken slightly, with pound and euro pushing to those highs, and gold last sort of hour or so pushing higher as well, and now above that pivot, but coming into this sort of messy area that we had in the early hours of trade, so perhaps better to look elsewhere. Just have a quick look over euro dollar again. So now just having trying to have a clean breakthrough of that pivot. You can see we had a first test and we came again, and you'll see this a lot when you do get a breakthrough, when the volume perhaps isn't the biggest. One test, two tests, and then sort of knocks on the door, and now, I mean, this is obviously a point in the market of interest that we found resistance to 2 a.m. in the morning Asian session, but I wouldn't say it's going to be the strongest level for sure. As usual, we'll be putting charts in Trading Live throughout the day. Data wise, as Ant mentioned, you've got the release at 10, and then some interesting numbers out of Canada. So dollar CAD here, let me just put this on a longer time frame. You can see it's been on quite a decent trend to the upside. So 130, you've got quite a few numbers coming out there, so something to be aware of for all the CAD traders. But yeah, as usual, any questions, please do get them in the chat, and if I don't get the chance to speak to you, have a great weekend, and catch you all on Monday for the next episode of Keeping Up with the Kardashians. Thank you.